Okay, so welcome to another episode of Accountants Are Sexy, Change My Mind. Today we have Peter Charalambous with us, who is an insolvency practitioner and specialist, and he's here to talk to you about all things insolvency. I'm going to say this in a really naive way, insolvency related, but in particular, what's going on with the COVID loans and the bounce back loans and the questions that he's getting asked the most from accountants. So I'm really looking forward to tucking into this episode. And I'm going to ask some really daft questions. So, Peter, welcome to the show.
Thank you very much.
So that was a brief introduction. Do you want to just give an explanation of why you're here, why you're in insolvency, and what it is you do?
It depends where you want to begin. If we roll back to 15 years ago, I was floating around in audit as an ACA trainee, and I think I struggled with it. I struggled with the fact that it was rather mundane. Before that, I was an accidental accountant because I studied architecture.
Aren't they all?
Aren't they all? I studied architecture, so I think I got caught in the 07-08 recession and thought, you know what, let's just be an accountant. And then after 6 months, I thought, oh no, I don't think I can crack audit. This is a bit painful. No disrespect to any auditors out there. You all do a cracking job, but it's horses for courses, and I needed a bit more excitement. And I ended up applying for a role in insolvency. I was told it was a little bit more exciting. Each case is different. I thought, yeah, I'm sold. Yeah, I'll come. I knew naffle about insolvency, and the more time I spend in the field, the more I realised there's still so much more to know. It's incredibly unique because you can end up taking an appointment over any industry, and if it's say a trading entity, you're trying to rescue the business in administration, say, then you basically replace the directors. So during my time, I've run civil engineering firms. I've run an architecture practice that I ended up trying to sell, which was quite ironic. I've traded men's clothes stores, running in between various shops in central London, trying to figure out what was going on with stock, whilst sales and dealing with suppliers and all kinds of things. So excitement is definitely what I got. There's times that it can be a bit too exciting for my liking, and there's too much going on. But yeah, I absolutely love it. As morbid as that sounds, but insolvency practitioners, as far as I'm concerned, are very much misunderstood. We're odd creatures for sure, but very much misunderstood.
This is where I was gonna go with this. It does sound like a morbid industry because you're dealing with essentially the death of a business. You know?
Yes and no.
Am I wrong?
It's yes and no. The first thought in any insolvency practitioner's mind should be, can I rescue the business? That's step one. Step one is, what happens if I do nothing? So directors are sat in front of me. They usually are coming in front of me because there's a whole bunch of liabilities that they can't pay and they can't see the wood from the trees. So the first thing we muddle is, what happens if we do nothing in this scenario? And usually the answer to that is pretty morbid and pretty bad. The second thing is, how can we rescue this business? What can we do to turn it around? So think of me as part psychologist, because I need to understand where the directors' heads are at.
Yeah.
If they fully believe in this business and they're 100% committed to it, which is very difficult if you've been swimming against the tide for however long, especially either during COVID or post-COVID, where incredibly difficult trading environments, they've got to still want to fight. There are times when the directors basically say, I can't hack this anymore. I need to close this business down. In which case, the advice I give them is completely different to someone who's saying, I still believe in this business. It was a bad debt that knocked us sideways. It was COVID that knocked us sideways. What can we do to get this business back on its feet? So, can we rescue the business? Can we safeguard jobs? One of the best jobs I did in my career was rescuing a sandwich chain. It was a chain in central London. It was actually on BBC London News, and we safeguarded as part of 150 jobs. Pack administration, and that was just before Christmas.
Yeah.
And always in insolvency, it can be touch and go. So we had a couple of bidders, but it was the week before Christmas. We're trying to get landlords to agree to licenses to occupy and trade for whoever was moving in, and no guarantees on which sites we could continue trading in. Thankfully, by some kind of miracle, it all just fell into place.
That's what happens at Christmas miracles.
It is very much so, and that was incredibly rewarding. But you're right, more often than not, we are liquidating a business in order to close it down. But out of the ashes, come directors. At the end of the day, we're not dealing with assets and liabilities, we're dealing with people. We're dealing with employees who've lost their jobs that need to get paid what's owed to them from the National Insurance Fund. That's where part of our NI goes at the end of every payslip.
Right.
We're dealing with.
I did not know that, by the way. I have no idea. I just know that it goes somewhere.
It goes somewhere.
Yeah.
Part of where it goes is in the National Insurance Fund, which is a pot of money made available for redundancies,
right.
Where the business itself can't pay. So you've got employees. You've often got angry, upsetting, confused creditors. Where one business goes down, especially in construction, it can drag others into the mire. A large bad debt can knock out another company. So it's dealing with those stakeholders, and also we're dealing with directors who are often very stressed because they've been fighting the tide. Creditors calling, employees asking questions. Is my business going down the pan? Is it not going down the pan? Where do I turn? Who can I speak to? And the answer is, someone like me, because my job is to take into consideration the financial position of the company, take into consideration where the rest of the where the rest of the creditors lie, and find a solution. I often think that being a director is a very difficult job, especially in a small business, an owner-managed business. The pressures are coming from absolutely everywhere. So if I'm doing my job correctly, my job is to understand the directors and what they want to achieve out of a liquidation. And I always say to people who worry of the stigma of placing a company into liquidation, that you're not the first, you're not the last. Donald Trump has done it. A whole bunch of other serial entrepreneurs have done it. And when you start again, it might not be now, it might be in a couple of years' time where you've got the headspace to go again. You're not starting from nothing. You're starting from experience. There will have been lessons that you've learnt as part of the demise of the previous company.
I think there are some people, and this is not necessarily the smaller owner-managed businesses that I deal with on a day-to-day basis, but there are some people that use insolvency as a method. Like, right, yep, bad idea, not going anywhere, insolvent, make it insolvent, get rid of it, like just to cut the ties with it. So it could be used as a strategic decision, not that I necessarily know too much about whether that's a good or a bad idea.
Well, I bring this back to the UK being an entrepreneurial environment. We have a culture of entrepreneurship, and we want to keep that. I think it's one of the good things of UK PLC, and I think our insolvency regime supports that. It enables you to go again. There's no such thing as a black mark against your name because you've done a first insolvency. I caveat that slightly, where there's been kind of wrongdoing or fraud as part of an insolvency, then you could be looking at a director's disqualification order. But if you've genuinely had a go, you've run a company, it was a bad idea, and as a result, there are some creditors and an insolvent balance sheet, then you place the company into liquidation, and you're off again with the next idea. And it could be the next Gymshark. It could be there's a budding entrepreneur in everybody. That's what I firmly believe. It's just whether you've got the determination and the fight and the guts to give it a go.
Yeah, I think the idea of starting a business and being very successful the first try is like really hard. Most people think that their first business is going to succeed and fly, but you have to go through the lessons of watching yourself fail and overcome that. I mean, I know that I've been there. I know that tons of other people have been there as well. I don't necessarily, just looking at it from the accountants and bookkeepers perspective, this is quite often their very, very first business. They don't necessarily have any failed businesses behind them because they trained as accountants and then started their own business. So that's an interesting perspective that I've not really given too much consideration for. What's your relationship like with accountants and bookkeepers? Now, obviously, they play a pivotal or a very important role when a company is deciding to go insolvent, or even before that, when they're understanding whether they are solvent throughout the years of tenure.
No, I think you're spot on with the use of your first word, which is pivotal. They are pivotal. They're pivotal insofar as a good accountant bookkeeper will know where to turn to in various situations. I think accountants are the first port of call for most directors. People use their accountants as a sounding board. So they will often come to accountants for a referral for, say, a solicitor or just some general advice. They've got employment issues. Normally, the first person they'll ask is their accountant. What do I do? And it's very easy for directors to bury their heads in the sand when things are going wrong. No one really likes to admit it. So first is it's important for accountants and bookkeepers to be approachable, for their clients to feel like they can just have that conversation to say, look, things aren't going particularly well. I don't want to wait till the year end where we go through the books and realize that, things aren't looking good. So the earlier somebody takes advice, the better. That's from a director's perspective. And for accountants and bookkeepers, it's knowing where to direct those queries. So I call them my introducing accountants. My job is to look after them and their clients. So I always say, if you've got someone in front of you who's not sure where to turn, things are not going really well, book in a call with me. Let's have a Zoom call. Let's have a meeting with the directors. And talk it through, walk them through their options. Every conversation turns into a job that turns into an insolvency or a restructuring for me. But what I want to do is be there as a sounding board, an offshoot to your business, so that you can better support your clients.
I would imagine that accountants have a very tough job. If they don't know and haven't handled too many insolvent businesses before, they have a tough job recognizing where things are going, or not necessarily where things are going wrong, but when they see things going wrong, how to raise that as a topic. That must be quite an emotional topic.
It is, and you're spot on. So I've grown my business predominantly through Instagram, actually. So I'm dealing with people.
That's where we know each other from.
Yes, yeah, very much so. So I'd say that I'm dealing with and predominantly work alongside younger accountants who have set up their business, say, in the last 5 years. And it might be the first time that they've had I call them tricky clients. They're the ones that are being a bit quiet, being a little bit unsure, may not be paying your invoices. And those are the ones that really need help. And unless you've gone down that trodden path, it's often difficult to know where to turn. So I've had accountants DM me saying, look, I've got a client I don't know what to do with. And I said, yeah, usually that's a client I can help with. Because in my time, I've either seen it, done it, or know who else I need to turn to. Because most insolvencies have something unique or slightly left field about them. So routine day to day, you might have each accountant might have anywhere between, say, 50 and 300, 400, 500, 600 clients for the bigger SME accountants out there. And statistically, 1% of those may benefit from insolvency or restructuring advice. So if you do it for the first time, you may not know where to turn. And that's why I often end up with DMs saying, look, I've got this issue. I say, let's have a call and figure out what's best for that client. And it makes life easier for the accountants as well, because normally these kind of pain in the ass clients they're not doing it to be difficult. They're in a particular situation and they don't know where to turn. And I often say to my introducing accountants, let's make that difficult client an easy one again, because it may well be just this particular business venture might be a bit of a dud, but the next one they do might be a 6-7 figure business.
And they're going to value your input and your directness and the support that you give them, because nobody wants to be struggling forever. I mean, I think that's a really important point. You might think it's a difficult conversation to have, but actually you'll be thanked for it afterwards, because no one else is going to have it with them. No one else is going to raise that topic because you've got all of the data in front of you.
Correct. Sometimes, the accountants, bookkeepers will be able to see it. It's where you've got an insolvent balance sheet.
Yeah.
Where's that being funded? It's usually a director's loan account. So the question is, when that director's loan account is creeping and nudging up to 6 figures, it's at that point, it's like, guys, what's happening with this business? Are you going to be funding these losses forever? Is there a business plan? Or is it that this is slowly going down the pan and you're just funding it and funding it?
Pouring oil on the fire.
Exactly.
So what do we have to look out for at the moment? I know that you have mentioned the COVID loans and the bounce back loans, and I would imagine this is causing all kinds of hell at the moment because people took them out without realising what they were for, and without realising that actually there's going to be some repercussions afterwards and we're going to need to pay them back. So where are the problems with these loans?
Sure. So something that we're seeing more and more of, I'd say 60-70% of the insolvencies that I'm dealing with have bounce back loans or C-bills. At the time that they were taken out, we're talking peak COVID. It was like the apocalypse. I remember I did very little formal insolvency work for about 6 months. During that period, I was literally on the phone from about 8 a.m. to 6-7 p.m. with worried directors that had been introduced to me by their accountants who didn't know where to turn. And I was just basically kind of reassuring them of things, they can't get any worse, can they? And the bounce back loan is there to prop up the business until we turn the corner and the economic winds are back blowing in the right direction. A lot of confusion at that time, a hell of a lot of confusion.
I think by mentioning the word COVID, I think that most accountants shiver.
Yeah.
That was a headache.
A crazy time is an understatement for sure. But those bounce back loans were there to support businesses. As long as they were used for the economic benefit of the business, which basically means you can use it to pay company creditors, employees, etc., etc. You can't get creative with that. So no holidays, no Range Rovers, and other things like that. And you'd be surprised.
Didn't it? I mean, I know where it happened. I know that I was half in, half out of the property industry at the time from a marketing perspective, and I know that there were property investors getting these loans and then using them as investment money. And just really smarts a little bit, It does very much so. I think the bigger picture is, as long as the loan gets repaid and there's no real harm done, it's where the loan defaults, and I suppose that's where I'm coming in more and more. It doesn't sit with me very well morally, but there we are.
Yes, very much so. And there are reporting requirements for both accountants preparing the financial statements, and also for the insolvency practitioners on the other side, potentially dealing with the closure of the company. So, you'd like to think that as part of the reporting regime that we're all by default having to comply with, that those who have been fraudulent will be put to task. Those that repay, in theory, no harm done, and those that default, I was reading a stat that blew my mind yesterday. 3.8 billion is assumed to be the level of bounce back loan fraud. The
Wow.
insolvency service, which is effectively the government department that regulates insolvency, that all insolvencies practitioners report to,
Mm.
they've recovered 300 grand.
Oh,
And in total, since the beginning, I think 1.1 million. And I'm
wow.
like, sorry, what? I mean, a drop in the ocean, that doesn't even cover it.
Yeah.
Yes, there's been directors that have been disqualified as a result of bounce back loan fraud, but I think those stats give an indication as to where I think the insolvency service is really lacking. I mean, that's not to say that other insolvency practitioners haven't recovered fraudulent bounce back loan use and misapplication and all that kind of stuff, but you'd think that the insolvency service probably be pulled up on this, but I'm just saying my mind that I think there's more out there, and more can be done in terms of that. But I suppose the fraud aside, your average director would have taken a bounce back loan, utilised it to pay their rent and their employees and the key suppliers, and hoped for a better day. Fast forward 2021, end of 21, beginning of 22, it's a completely different trading landscape.
Yeah.
People are going into the office 5 days a week. We're now in a cost of living crisis, so people are not spending on I wouldn't even call them luxuries, but there's a whole raft of industries out there that are struggling as a result of a completely different environment. No one could have predicted this. Similarly, where we are with interest rates, construction is small scale construction. Actually, even larger house builders are on their knees. Everything's on pause, waiting for
materials and things like that have just risen exponentially, haven't they?
Yeah, spot on. So there are circumstances where bounce back loans can't be repaid back because the trading environment, that better day hasn't come. If anything, dare I say, for construction, today is worse than peak lockdown.
So, an ignorant question, but would insolvency protect them from having to repay this loan? Because I didn't think it was protected. I think it was from a person that was contributed, allocated to their personal, not their business. Is that right?
So 99.9% of the time, the bounce back loan is a company liability.
Okay.
And so when the company is placed into liquidation, the bank applies to the Treasury for repayment. So the banks don't lose anything. And the directors would not have signed a personal guarantee. The only way in which it could fall personal is if the directors put it in their back pocket in the first place. Instead of using it for the economic benefit of the business, they misused it, then they're liable to repay it. But 99.99% of the time, it's just effectively an unsecured creditor in a liquidation, and does not affect the directors as long as they've applied for and used the bounce back loan in the right way. It's meant to be a lifeline to give as many businesses that needed it the best chance to survive, and I think it achieved that. It's just unfortunate that where we are, where UK PLC is, and it's not just us, it's Europe, it's worldwide, that's struggling with various headwinds.
It's interesting. So when the accountants and bookkeepers are working with their clients, what do they need to look out for, and how can they introduce this conversation to them?
Sure. So there are some telltale signs. It's, the bounce back loan hasn't been repaid. We are coming up to 3 years from when the bounce back loan may have been first taken out. So there should be potentially 2 or 3 years worth of repayments. If they took out 50 grand and they're still at 48 and a half, it means that they've utilized every single payment holiday, everything that the bank would have offered, and maybe on interest only.
Right.
Which probably means that this business is really struggling to repay. Often you'll see that the directors then aren't taking any salary, potentially have an increasing director's loan account. Those are telltale signs that actually things aren't quite right. And it would be worthwhile having a chat with myself.
Yeah, it's going to be a tough one. I think it'll be a tough one to raise, especially as you say, you built your business on Instagram and they are less experienced accountants because they haven't gone through it themselves. They haven't necessarily seen their own clients go through it. So raising that topic in the first place. But I think it's important to go back to the first thing you said when I asked, like, isn't this about dying businesses? And you were like, well, actually, no, we can probably get them back on track. And if you frame it in that manner, maybe the conversation is going to be an easier one to have.
Correct. Spot on, spot on. And also the risk of doing nothing.
Yeah.
So usually HMRC is left behind in terms of payments. You're going to pay your suppliers. You're going to pay your employees.
Got to keep the business going.
Yeah. And there is a perception that actually I don't have to pay the tax man yet. And the answer to that is HMRC themselves as an involuntary creditor. They don't choose to do business with you. And so what we're seeing at the moment is even a relatively small bill, let's say a £40,000 PAYE bill that's accumulated over, say, the last 6 months and 1 or 2 quarters of that haven't been repaid. At some point, HMRC are going to come knocking. They'll come knocking potentially with the High Court enforcement officer. So they'll come down to the trading premises, to the office, and start repossessing assets to put in an auction to repay HMRC. The minute that happens, well, you know, if you're a travel agent, say, and all of a sudden you've got no telephones and you've got no laptops and you've got no desks, you can't operate. So you don't want to leave it too late. Similarly, HMRC on slightly larger figures may just go ahead with a winding up petition. We've seen a lot of that in the news with rugby teams, with football clubs, that HMRC are just going straight to court to place companies into compulsory liquidation or force them to pay. So another signal is where HMRC debt, Crown debt, is beginning to build. Is that business trading off of HMRC's back? Right. That's potentially something called wrongful trading that directors could become personally liable for. So actually, that conversation that the accountants and bookkeepers have with those directors is actually to protect them. So if the liabilities continue to grow, you could be in trouble for wrongful trading later on down the line. So we're having this conversation to protect the business, to protect your exposure, to limit your exposure in terms of directors' own accounts and you having to pump money into what is seemingly a failing business. Let's see what the options are. I don't charge for initial consultations. As I say to all my introducing accountants, you know, my job is to support you and your clients. And if I do that properly and I'm helping rescue 4 out of the 5 businesses that come to see me, the one that I do put into liquidation pays off for the conversations that I've had for the other 4.
Yeah, I guess so. It's a weird way of looking at it, but I guess so. So just for my sake, what happens if someone goes into liquidation? Like, what is the process? What do they experience?
So it all depends. In both accountancy, bookkeeping world and in insolvency, us as the smaller practitioners are in competition with online-only options, are in competition with outsourced options. In insolvency, it's probably less competition because there's only around 2,000 licensed insolvency practitioners in the whole of the UK. So we're a very small bunch. There are online factories out there that have basically 2 licensed insolvency practitioners and hundreds of staff potentially giving advice or drafting documents underneath, and that to my mind is risky. They are incredibly cheap. We've seen our regulators, the Insolvency Practitioners Association, do a campaign to basically say, don't get advice from social media. Make sure that the person you're getting debt advice from is licensed. So I've built my practice on making sure that we support the directors through the process. Our tagline is with you every step of the way. We hold both the directors and the accountant's hand through the process. The process of placing a company into liquidation is actually relatively simple. We've got to prepare what is a glorified balance sheet as at now, and it's called a statement of affairs. So it's got the assets and liabilities, but where it's slightly different from an ordinary balance sheet, even though the figures might be the same, is that it puts the order of priority in place. So employees get first bite of the cherry from any assets. Then it's HMRC, then it's the unsecured creditors, and sometimes you might have a bank with a charge that may sit in between, depending on whether it's a fixed and floating charge and the assets, and it can get very technical thereafter. But think of it as a balance sheet with a slight twist to show the order of priority of the liabilities, and we have to prepare a report to the creditors. So the insolvency practitioner's comments on who might get what in the insolvency, a brief history from the directors as to why the company failed, and then issue notices to call meetings of members and creditors to place the company to liquidation. So if we go from initial meeting to, say, instruction, that's usually a week or so, and then the formal liquidation of the company might be 4 to 6 weeks after our engagement. So it's a fairly quick process. So
the questions then are, how much involvement does the accountant have at this stage? Like, how much work is there to do? And is this something that just going down, I'm asking questions that they might ask themselves, or the worries that they might have. How much work is it, and do they charge for it? Because where does that go?
Sure. So what I need is often a fair bit of assistance. I don't know the client. I don't know the financial position. Often the directors don't know their financial position or don't really understand it. So we have to, we issue an information request questionnaire that usually the accountants complete. It might be potentially a little bit of work to do in reconciling, say, a director's loan account or intercompany loan accounts in order to be able to have the figure of what the liability is. There might be a bit of work in consolidating some of the company records, might be the payroll records, because if we've got employees who will need to, one, figure out what their claim is, what they're owed, and we need the records in order to deal with the redundancy payments office and verify that position. So in short, the accountants can be as involved as necessary to get the relevant information. There are some that they just leave it to the directors, but that really delays the process and creates a hell of a lot of stress for them.
Yeah.
So usually what I say to the introducing accountants is, the work that I'm asking you to do, keep a record of it on a time cost basis, and then you can invoice me for assisting me in putting the information together to place the company into liquidation. So, we wouldn't want the accountant to lose out. Nobody works for free, but at the same time, we all have a job to do. And in these kind of situations, highly stressful situations, our job is to make it as least stressful for the directors as possible. So having a good relationship between the introducing accountant and the insolvency practitioner is really quite key. And also making sure that the directors have got the information that they need to send it across to us.
Well, this has been really insightful, so I appreciate you spending your time coming on. I do have one further question for you. It's all right.
Yep, fire away.
What is the sexiest thing about accountants?
What is this? Can I say the sexiest thing about insolvency practitioners? Because most IPs are also accountants.
Okay.
So I was thinking about this, like, what is sexy, and I remember we did discuss it. And in Pretty Woman, Richard Gere was more or less buying what was an insolvent company, and he was kind of wheeling and dealing, and that's pretty much what insolvency practitioners do. So,
You're likening yourself to Richard Gere.
If I can do that, yes. So then that would definitely make me very sexy.
I love it. Thank you ever so much. Right, I hope that, I found it really insightful. I hope that other people have found this insightful and not as scary. And I think that's the main message here. Insolvency isn't necessarily as scary as one might first think. You are not the Grim Reaper of business.
The Richard Gere.
You are more of the Richard Gere than the Grim Reaper. And I'm assuming that Instagram is the best place to come and find you if they want to learn a bit more about what you do and how you help people.
Yeah. So I'm at in.solvency. I don't know if we can throw my direct dial in my email address.
Well, I will put a link to your Instagram, and if they want to DM you at that stage, then I think that's the best way to go about. You will find all the details on your on the link. No, not LinkedIn, Instagram profile, I'm sure. And if you haven't, then why not?
Yeah.
So yes, once again, thank you so much for coming on. That's been absolutely exciting.
Thank you so much for having me.
Take care.